Hi everyone, this is a technical analysis on the S&P 500. Let's start with some fundamental background first. Last week we heard from many Fed members as the blackout period ended after the FOMC meeting. The general sentiment is the same, wait for the data to decide how much more they should tighten. In fact, although the majority expects two more rate hikes this year, they keep repeating that they are conditional to the data. The data we saw last week would make them lean more towards a hike, as the housing market data surprised to the upside, the US jobless claims were still solid, and the US services PMI beat expectations. Everything will, of course, depend on the next NFP and CPI reports, but if we keep seeing good data, the Fed should raise rates in July as the market currently expects. On the daily chart, we can see that after reaching the 44.94 high, the S&P 500 started a slow and steady retracement. The 43.24 support looks to be the best spot where the buyers should pile in, as we can also find the red 21 moving average here. On a break lower, the buyers may wait for the price to come into the trend line, while the sellers should enter on every breakout. On the 4-hour chart, we can see that we can also find the 38.2% Fibonacci retracement level near the 43.24 support for further confluence. The moving averages are crossed to the downside, defining the current downtrend on this time frame. The sellers are likely to lean on the moving average and keep targeting the break lower. A moving average crossover to the upside should signal a change in trend, and the buyers may start to pile in, expecting new highs. On the 1-hour chart, we can see that at the moment the price is finding some support here at a previous swing low level at 43.83. A break to the downside should see some sellers piling in, targeting the 43.24 support. In case the price bounces strongly here, the buyers may want to wait for the price to first make a new higher high, breaking above the 44.27 level before jumping on board, and then extending to the upside, targeting a breakout. This week is even emptier than the last one on the data front, with just the US jobless claims and the US PCE scheduled for the end of the week. Nonetheless, we will hear again from many Fed members, but given that we haven't got any important economic indicator yet, it's unlikely to see them signaling the next move.